Today, I'm going to talk about something pretty interesting. This all came up. I was on Making Money Friday with my man, Charles Payne. This guy always goes against the grain, always representing the average investor, which is you, which is why Charles and I get along so well. He was talking about dark pools. And I know out on Twitter, a lot of people, especially new investors, are trying to understand what are these dark pools. I know they're stacked against us, and what can we do as the average investor? What I'm going to talk about a little bit about dark pools. I'm going to talk about Wall Street analysts and how Wall Street is stacked against you, but what you can do to overcome it. So I know a lot of people are just really getting started in the stock market. The millennial generation, 20 somethings, largest generation in US history, really last year during the pandemic started dipping their toe through places like Robinhood into the stock market. And they're right now in that process of really trying to understand, how do I make money in the stock market? How do I set up a strategy? How do I manage risk in my portfolio? And that's really where I come into play. That's exactly what I've done with my academy, is to help arm you through places like here on my YouTube channel, how to understand and think more like an institutional investor, more like somebody who's going to be in here with a very solid strategy, who is able to execute in the market in a way that is consistent with what you're trying to do for your own financial goals, meaning getting you to tune out all the noise. And today, with social media in our hands, Twitter, Facebook, StockTwits, we are inundated with information from gurus out there who just got into the market in the last 18 to 24 months, who are telling you what to do with your money, who are giving you these haphazard ideas of how to trade, how to invest. And when I really started looking at these, not only is the information not so good, a lot of it is just factually incorrect. A lot of it is very misleading. And that's why I started about 8 to 10 months ago this YouTube channel, so that every week, especially with myself on national media every week. I was on with Charles. I only get about 2 minutes, as does Charles, to talk about things like dark pools. And so what I wanted to do with YouTube is be able to expand on some of those conversations that I have with Charles every Friday. So today there was two issues. There was dark pools that were talked about, and there was also Wall Street analysts. And with fewer Wall Street analysts putting out recommendations, what do those two things mean to you? So I'll talk a little bit about dark pools and what are they. I'm going to talk high level about this, really just to give you the information that you need to know. Now, first of all, you have to think, what type of investor are you? Are you someone who is investing for income? Well, there's going to be certain securities that you're looking that are paying dividends, real estate investment trusts, consumer staples, maybe some financials. And when you're looking at those types of stocks, you're looking at the balance sheets. You're looking at their ability to sustain free cash flow, which they take part of that cash flow and then give you a dividend. And that dividend that goes into your bank account or is reinvested is how you're making money. Now, so dark pools, if you're a dividend investor, again, this is why all of this information is only important if it impacts you. Doesn't matter what it does to people if it's not impacting you. Dividend investors, that part of your portfolio, and I always recommend everybody should be investing for one or two reasons, or for, like myself, a combination of both: income, collecting income from the portfolio, or growth. So if we're talking about the first, income investing, dark pools, what's going on in those trades are not going to affect you, right? Now, if you're a growth investor, the question is, are you trying to buy companies that you think are going to be materially higher 6 weeks from now, a year from now, 2 to 3 years from now? I talk a lot of times about the growth investments that I've made in Facebook and CrowdStrike and Amazon. These are companies that continue to grow top line 20 to 25%. My returns in those stocks have been astronomical, but I've taken a long-term view on those. So when you're a long-term investor, again, dark pools don't affect you. Dark pools, where they do affect people. Let's think about, what were dark pools originally created for? Now, when you're looking at the normal day-to-day trading, you're looking at your level 2, level 3 quotes, the big institutional investors, a lot of times you can see them there. You can see the bid, you can see the ask, You could see it a few levels down. You could see very transparently who's buying, selling into the market, who's selling short, who's covering shorts. So you're able to get a level of transparency of what the big boys are doing. Now, it was originally created for big institutions who have good intentions, who want to place long-term strategic investments into the market. And the problem is when you're moving big size in the market, that can tend to actually move the market away from you. So let's think about that. If you're trying to buy a stock and let's say the bid ask spread is $20 by 2002, and there's only 500 shares or 1,000 shares at the offer, it's very difficult for you to come in and buy at that ask even without moving the market. Because if you're coming in, let's say to buy 200,000 shares, as soon as they see that, people are going to pull their ask and they're going to raise that, right? It's like this. It's like if you knew that you had one single bottle of water, 100 people just ran a marathon, the store next door to you ran out of water. What is the supply and demand going to be for that bottle of water? Huge. So you would be able to charge a very, very significant premium to sell that one bottle of water to 100 buyers, right? Now, here's the thing, right? If everybody in their storefront was only showing one bottle of water and you didn't show what was behind you, then it would be quite a bit different, right? And so the idea being is what they wanted to give institutions the ability to do is actually let institutions compete on the same playing field as retail investors. Because when you and I go in and buy 100 or 200 shares of something, it doesn't move the market. The market doesn't care. You usually have something called auto execution where a market maker picks it up in a second. So you don't have to worry about that. But the big institutions aren't able to do that. So what they did is they created these alternative trading systems to where they were able to go out, put those offers off the market, let's say, in this blind pool, transaction in the dark pool, right? Inside this dark pool, which isn't as transparent, average investors can't access, they're able to match up buy and sell offers and get those executions done in a way that is more price efficient, right? And so the challenge with this is the reporting when you're dealing on real-time exchanges is real time. You can see what's going on, but some of these aren't getting reported for hours later. In some cases, when you're doing connectivity changes desk to desk, like London to New York, they don't have to be reported for 24 hours. Now, the really big hit, though, has been apparently there's been some trades being done in dark pools by some nefarious traders, potentially some big institutions that are under fire right now that are not getting reported at all. And see, that's where obviously the line has to be drawn. And what was a lot of things essentially initially set up to be a good thing, we all know there's going to be bad players out there that are going to take advantage of this. And there's things like short covering, shorts that are going on out there, manipulating other markets, manipulating price. And that quite honestly is illegal. And so the challenge is these things are not being brought up. So today on Fox Business, when Charles Payne brought this up, although look, guys, television is sound bites, sound bites, sound bites. Charles, myself would love to spend hours on this, bring in other experts, really get down and dirty with dark pools, but television doesn't allow that. I give kudos to Charles because of the fact he brought this up. And just by bringing this up, it puts it on the radar of investors. It puts it on the radar of regulators. And that's how you get things out there. So kudos to Charles. Kudos to the people on Twitter that were going ahead and saying, hey, Charles, please speak up about these things. So that's going on. But guys, if you are that dividend investor, if you are that long-term growth investor, as I mentioned, these things don't really impact you, right? It doesn't really matter what goes on a day-to-day basis. Now, also where you have to think about this though, are you going to be a day trader, intraday trader? I could talk about this because I was a prop trader for about 2 years, meaning my P&L was essentially closed out daily, making the market. I made markets and stocks. We were looking to scalp. We were looking to be able to take short-term trades in and out of the market. And we used to be able to do that 17, 18 years ago on a relatively level playing field. But today with things like dark pools, today like things like algorithmic trading and computers that are stationed in Singapore so they can get a split second ahead of you on the bid ask, pull the bid, pull the ask. The trading game is rigged, right? It's rigged in a way for the average investor. It's very difficult to do it, so much that I've been trading since I'm 20 years old. I do not try to intraday trade anymore because there's no competitive advantage. As a matter of fact, I have an extreme competitive disadvantage in doing that. And so you have to ask yourself, if you're someone who's trading, what is your competitive advantage? How is that working out for you? And unless you can articulate why you have a competitive advantage over the Renaissance, the Citadels, all these guys who quite honestly might be having access to things, not quite honestly, they do have access to tools that you don't have that puts you at a disadvantage. Why would you want to do that? Especially if you look at finding some of these names, like we talked about CrowdStrike, I said Amazon, Facebook, some of the smaller names that are out there, doing your research, finding early stage companies that are growing, have solid balance sheets, who are dominating and leading in their industry. You don't have to make money over the next day or 2 days. You can place yourself into long-term investments. And I can tell you, even as someone who used to prop trade intraday, the biggest money I've made in the market by far, millions of dollars, have come from these longer term investments. I've owned personally Amazon since the 300 level, and I haven't sold a share since then. As a matter of fact, I bought a lot more since my initial investment. Those are the types of things that I want to do. So as an individual investor, you have to ask yourself, what are you trying to accomplish? Because if you're like me, buying solid dividend stocks, buying solid growth names, maybe investing in the private markets where you're getting into companies before they go public, if you have the ability to do that, which I'm actively working on trying to make more mainstream and democratize and get out there to everyone. If you're able to do those things, then really to you, dark pools do not make much of a difference, because in the short run, yes, they can really corrupt price. They can really disrupt things. And if you're trying to go against that, it is going to hurt you. But once you lengthen your time horizon, you're not going to really be susceptible to the negativity that comes from those actions, right? So that's what I wanted to say about dark pools, right? Essentially, they were set up to do some good. Just like a lot of things out there, there's a lot of bad actors that are doing a lot of wrong things with it. And that's the truth. But that's the truth in general, and always has been, about investing on Wall Street. It's always been stacked against you. And the sooner that you realize that, the easier this game is going to become. If you sit there and think that you're going to have the same level playing field that they do, you're sadly mistaken. Now, there's a lot of people out there like myself trying to change that, but it is changing. Access to information is out there now. People that have been in the industry that are sick and tired of what's going on with the few institutions dominating the narrative, dominating the deal flow. We're tired of that. We're pushing back. Society, like I said, the millennial generation is the future. They are pushing back against traditional Wall Street, and things are changing. The access to information that you have today is almost equal to what analysts have. And that's why the number of Wall Street analysts are shrinking. So what I was also talking about with Charles is, well, Wall Street analysts are going away. So a lot of the buy recommendations that investors used to look for, oh, we got a buy recommendation from this Wall Street firm, let's go out and buy that. That's been nonsense for years now, guys. When you look at Wall Street analysts, less than 10% of the recommendations that they've made over time have been sells. And so let's think about that. Wall Street, these big brokerages that are putting out the recommendations, a lot of their money comes from investment banking. So if that's a new word to you, investment banking is, let's say one of the big investment banking firms on Wall Street goes to Coca-Cola, and Coca-Cola wants to do a bond issuance. But when they issue those bonds, the big analyst firm is going to wrap that up, package it, send it out to investors, and that's how they're going to make money. Coca-Cola is obviously going to pay that firm to do that. If you're a company looking to go public, a new company that's going to go public on the market, you go to one of these big firms to help take you public, and you pay that big firm a tremendous amount of money. Now, when Coca-Cola is out there in the marketplace and one of their analysts has to cover it, this new IPO that just went public maybe a few months ago that paid you millions and millions and millions of dollars. If you as an analyst look at that and say, I don't really like where Coca-Cola is, or this new company, it's just really not meeting its targets or expectations, I think you should sell both of these companies. Well, how do you think your upper management's going to act to that when 40, 50, 60% of your profits are coming from investment banking. Do you really want to piss off Coca-Cola? Do you really want to piss off this new IPO company? And then other IPO companies start saying, oh, that's a firm that put a sell rating on the one that they just took public. Let's go with the guys who are always putting buy ratings. Let's go with the cheerleaders, right? So when you start understanding these conflicts of interest, and you start really looking at how much information from that is available out there from people like myself, people like Charles, just information that companies have to make public now. And we have Sarbanes-Oxley, so we really can believe in what we're seeing in terms of financials now. You don't really need those Wall Street analysts. I was just looking at FactSet. Less than 6% of the S&P 500 has a sell rating on it right now. So it's always buy. When times are good, when times are bad, it's buy, 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 buy. So you have to look at this information and say, really, how valuable is it? We don't really use it at all. We just use it for consensus to kind of see what people are thinking. But there's not one Wall Street analyst, and there hasn't been for a decade, where we say, okay, that's the person I'm going to follow all their buy or all their sell recommendations. So this is really where it comes down to, guys, a few things that I want to tell you right now, right here today, so that you could stop worrying about all these things. First, understand the system is rigged. It's getting better, but you do have an advantage, right? Because you can buy smaller lots. Your biggest advantage is you have time on your side. For most people, like I tell them, when they get into this investing game, give yourself at least a 5-year time horizon. The best thing you can do for risk management, well, the best two things are, number one, position size. Limit your position size, because you can't lose anything more than what you put into a stock unless you're an idiot borrowing a margin. Or secondarily, what you can do is lengthen your time frame, right? The longer, as a trader, as an investor, the longer you give yourself time in the market, the less risk that you're going to take. So even as a trader, if you're trading 1-minute bars versus 60-minute bars, the ability to have a more successful, consistent trading methodology is going to be much more with those 60-minute bars. And it goes out to swing trading. If you're swing trading within a 3-day period, well, you're better going to a 30-day period or 60-day or 90-day period, because you have a lot more consistent data. You're able to build a system that's more consistent. And that longer time frame, when I buy a stock, the minimum time frame on my growth side, when I'm buying a growth side, is there's two things I look at. Number one, 12 months. Number two, based off of my analysis, do I believe that there's an intrinsic valuation on this company today that is a minimum of 20% less than where it could be in 12 months? And if the answer is yes, I then use technicals for an entry point and I buy the stock. I review that every 12 months. And if it's not meeting that criteria, I sell the stock. But I'm giving myself 12 months in which to make that decision. So the moral of the story is this, guys: dark pools, Wall Street analysts, Wall Street in general, yes, it is rigged, it's stacked against you. But if you understand what type of investor you are, it really doesn't matter. Well, let me add the caveat: if you are an educated investor. That's why you're watching this. That's why people have come into my academy. That's why people are watching Charles and watching other people who are trying to give them transparent information in which to make decisions. So the information, guys, is free today. It's becoming more and more readily available. But the ability to take that information, digest it, understand it, break it down then into an actionable strategy that positively impacts your life, that's really where the value is. And so unless you know how to do that, you need to be very careful. Unless you know how to do that, start educating yourself. Start slow. Don't get into the market and rely on people on stock twits or on television to tell you what stock to buy, because they're not going to be around and telling you when to sell it. You need to start learning on how to do your own research. Stop wringing your hands about things that you can't control. Put a game plan together. Understand what type of investor you are. Understand your time frame. Understand your objectives. And I promise you, if you're consistent with your methodology, you're going to start to build conviction. When people panic and sell companies that you know that are good, you're going to go ahead and buy those. When people are euphoric and they're dancing in the streets and they're bidding up stocks that aren't worth anything, you're going to be smart enough to know it's time to ring the register. And over a long period of time, you are going to be smarter than the average investor. You're going to be smarter than the average Wall Street analyst. And you're going to put yourself and your family in a position to achieve freedom. Notice I didn't say financial freedom, because financial freedom is freedom. When you have money, you're able to make the decisions that you want to do that put you and your family in the best position possible. So I hope that was helpful today. I wish you guys continued success in the markets. Please continue to watch my YouTube channel. If you know somebody who's in the market who's trying to educate themselves, please forward it on to them. I really appreciate it. Click the bell below. You'll be notified. I get this out at least once a week. I try to do it Friday or Saturday, depending on what I have on. Thank you guys so much. Have a great weekend.